And now with the latest business and market news, over to Jane Edwards.
Thanks, Alan. Wall Street slumped on Friday amid a renewed round of uncertainty about European debt. Each of the major indices fell sharply, closing down by 1%. Greece formally asked a summit of European leaders for a second bailout package, but its crucial austerity measures are facing a parliamentary vote next week.
And it's most important to see whether the Greek Parliament is able to vote for new austerity measures to get new money. If not, the doors of the hell will be opened wide.
Adding to the jitters, the share prices of several Italian banks fell sharply, forcing them to be temporarily suspended from trade. It overshadowed a rise in demand for durable goods in the US, the only positive economic sign in a week in which Fed Chief Ben Bernanke gave a fairly lukewarm assessment of the economy. Looking at world share markets, the US and UK were steady over the week. Europe, not surprisingly, lost 2%. Japan had its best week in a year, jumping by 4%, while our local market limped to a flat finish. For more on that, here's Marcus Padley.
Well, the market managed to hit an 8-month low this week. We're doing a lot of work on the ASX 200 around 4,500. The RBA minutes this week seem to have pushed back the timetable for the next interest rate rise. The Bernanke speech about the US economy didn't do any favours to US stocks, one in particular CSL, who also got an FDA warning letter this week, which didn't do their share price any good. But the big stories this week were the NBN deal with Telstra and the Foster's takeover. On Telstra, the stock's been up 18% ahead of this announcement against a market that's down 10%. So it has done a lot of work. There's nothing really new in the announcement to get everyone excited. Brokers do seem to think the deal allows them to pay their dividend for at least the next couple of years. Quite a few buy recommendations around, but it does look like it's been better to travel than arrive. On the Foster's takeover, Saab Miller have bid $490 as an opening shot. They're clearly capable of paying more. Market's talking about them paying at least $550, maybe even $6 if they end up in a contested bid situation, which is perfectly possible. On the earnings front, we are still in the confession season. We saw a profits warning this week from Caltex and a profits downgrade from Qantas, which managed to go up this week despite the volcano. We saw some takeover talk this week in Paladin, also in Woodside, yet again, although the last time we got hyped up about that, it was a complete furphy. In other news, we saw APA Group down on the back of a $300 million capital raising. Murchison Metals, just days after getting environmental approval for their rail and ports project in WA, saw one of their biggest three customers, Sino-Steel China, pull out, threatening that project. We wait to see what happens there. Mincor was up on the announcement of a 10% share buyback. That stock's down 85% from the top in 2007. And lastly, Ausdrill had quite a good week, basking in the fairly good reception to the Barminco IPO, which is coming up and looks to be going okay. Winner of the week this week is Foster's, up 12% after possibly the most predictable takeover in history. And loser of the week is Arafura Resources, down 16% on delays to the feasibility study to one of their projects.